we're going to make this part two because I want to go over a number of the predictions that were in the book that came true. The book, of course, is The World According to Martin Armstrong, Conversations with the Master Forecaster, the place to buy it, link in the show notes. And so part two here, basically, we're talking about some predictions you made that were in the book that came true. Brexit, interestingly, it missed, but I remember that prediction was in there. I ran it through AI. We had the 1987 stock market crash, Black Monday, predicted to the day. The Dow plunged 22.6% on October 19th, 1987. I'll never forget that. I lived in New York City. And the joke was, how do you call an investment banker or a stockbroker? And it's a taxi or waiter. They were leaving in droves.
Look, what people have to understand is that all these forecasts that have been correct, it's not my personal opinion. You can't have gold go to 20,000 and nothing else happen. Everything is connected. So when you stop looking at an individual market and only that market, all right, and you step back and you look at the whole thing, you can see it's coming like a freight train down the rails. If this happens, that happens, etc. So, like World War I and II, the capital came here. That's what made the Roaring Twenties. U.S. was bankrupt in 1896. It's when J.P. Morgan had to lend out $100 million. If it wasn't for World War I and II, there was no economic domestic policy that anybody could have done to change us from bankruptcy to the financial capital in such a short period of time. It was Europe blowing itself up.
Yeah.
And you have to understand that you have all these people out here, oh, it's going to crash. This is it. It's the biggest bubble in history. Very nice. However, again, they're not looking at the whole. If you go into war in Europe and Asia, by the way, what happens? You move your money to United States. All right. You don't leave it in a bank when you got tanks running down the street blowing up the banks. Let's get real here. I saw it even in rare coins, rare stamps, all the European rarities, Germans, whatever, all ended up in the United States because of World War II. Then afterwards, they started being, sold back. But they were all here. People used whatever they could to get, money the hell out of Europe. That's what's, really behind Bitcoin. And people don't understand this, but look, the volatility of Bitcoin, it all began coming out of China. The Chinese were using it to get money out. It's the same commodity. So I can buy it here and sell it in another country. It became a money laundering instrument. I talked to Canadians. They use it for that, to get money out of Canada to send to the United States. The same thing with Europeans. It's a way to get money the hell out. That's, it's not crypto. Oh, crypto's better than the paper dollar. Really? An EPM bomb will wipe out crypto. All right. If it erases all the computers, I don't think I'd want to have anything in there. But being in Florida, what happens? See, a hurricane comes, the power grid goes down, you can't even use a credit card.
I was in Madrid when they had their blackout recently, and they had no power backups in that entire country, and credit cards were useless except at the hotel where there was a backup generator. Luckily, I had €100 in my pocket and I was able to go places and do things. But otherwise, if I didn't have the cash, I would have been stuck in the hotel all day.
Yeah, no, that's the same thing. It's that's why I'm not real bullish as on crypto as a safe haven long term thing. It's a trading vehicle. And what I should mention is in and you can look on my site. This
ArmstrongEconomics.com.
yeah, the this new stable coin. Oh, it's crypto, everybody's it is not it's bullshit. What it is, it's a war bond. It's exactly the same thing they did in 1863 to fund the Civil War. They told the banks,
Greenbacks.
if you buy our bonds, we'll allow you to issue currency against it. So you can buy national currencies, bank notes from 1863. All right, all the different banks would issue it, backed by bonds. This is the same thing. You buy our bonds and can issue staple coins. All right. What's the difference?
Stable. Right. The currency, it's either backed by bonds or it's backed by dollars, right? So,
yeah,
Martin,
all
you're a
you have to do
30-year-old.
is look at when the Biden administration took Russia out of the SWIFT system. And then Blinken, one of these neocons, they don't know anything about the economy, nothing. All they look at is their objective. And he threatened China. If you help Russia, we'll do the same to you. They said, oh, really? Thank you. All right. That not only created BRICS for geopolitical reasons, but China began dumping U.S. debt. All right. Why? Okay. They dumped it because if you go to war, you're not going to pay. So they had owned 10%. All right. And you can look it up. They've been dumping, 50 billion at a clip. Right now, UK owns more than China. And in Japan, which has got a real serious debt crisis, maybe the worst. I just did an institutional report on that. And we were able to get our sources on it. And the real holders of U.S. debt in Japan is not the government. It's corporations owning the U.S. treasuries as a hedge against their own government. So all this stuff is coming to a head as we head into 2032, because, and this is what the censorship is about. They know they're in trouble. They just know it.
Yeah.
So they're just trying to hold on to everything they possibly can. And this is what a government will typically do. It becomes more authoritarian as it is starting to lose power.
Okay. So a 30-year-old kid with not a lot of assets, a 50-year-old person with assets who've worked their whole lives. One, what asymmetric bet can they make that's probably going to pay off major for the 30-year-old kid, and for the 50-year-old guy or woman, either way, what can they do to hold on to what they've made?
Well, I think what will happen is that you typically get a false move in markets before the major move. So I would expect the metals to maybe back off a bit, and get people thinking, all right, that's it, it's all over with. But then 26 is coming, and that's going to be geopolitical. When you get into the geopolitical crisis, all right, that's when you need something neutral. These people thinking, oh, the China's buying gold to their bullish. No, they're not. All right. They're not even buying euros. All right. Because they know you go to war, all that goes to zero. All right. So they've been buying gold because it's neutral. They don't care if it goes up or down. They're not traders. All right.
Mm-hmm.
So if you're going to look at the longer term, when you look at these dips, basically, I think you need the tangible stuff rather than anything crypto or something like that that will survive. And the main thing is that, so I like the silver coins, pre-1965, because the average person can say, okay, look at a quarter and just look at the date, and they know it's silver.
Yeah, exactly.
A silver bar, it can be nickel. The average person is not going to know. And that's what you have to understand. You might know what something is, but that doesn't necessarily mean everybody else will.
Correct.
So I think you need something of a common denominator. And of course, here in Florida, DeSantis has made gold and silver actually legal tender, which is interesting. So
you said silver over $50. How high can silver go?
It can. I mean, it's all going to depend upon how much the war develops for next year. I haven't looked at the projections as to where it's going out at that stage in the game, but it should go up and find the next real level of resistance will be the $50 area. Once you get through that, then you're probably looking at 75.
Yeah. Over what kind of time period we thinking? When's it going to hit 75? Not exact range.
I would say you're looking at more. If I look at, let's see.
Yeah, show us how you do this.
All right, we have a directional change here in 25, a turning point in 26. Then you have 29, then 30, 31, 32 for a high with a panic cycle. That's where we look like you're going into a major high around 2032. And that's a panic cycle in our yearly model. So we should get some very interesting high volatility then.
Okay. All right. So anyway, for all of you still listening, part 2, get the book. The link is in the show notes to this interview. We've sold over 2,000 copies. I think we're up to 23 or 2,400. It's been an amazing run. We're working on additional books. And Martin, I really appreciate it. Make sure you go over to armstrongeconomics.com. Sign up now for Marty's daily missives. You got to read them for sure. And financialsurvivalnetwork.com. Sign up for our newsletter if you haven't already. Marty, always appreciate you coming on, giving us some clarity here, and we'll just have to see if our leaders actually come to their senses.
Computer says they probably will not.
And I kind of believe the computer. Oh, by the way, if you got a question for Marty, myself, KL@kerrylutz.com. We'll get an answer back to you quickly. Marty, we'll talk to you again soon.
Well, thank you. Nice seeing you again. Take care over there.